One of the main promises of insurtech startups was to revolutionize insurance pricing by using new sources of data and advanced analytics. However, many of them failed to disrupt incumbents because they couldn't leverage data as freely as they'd hoped and struggled against the 900-pound gorillas in the industry. First, let's talk about the data challenge. Insurtech startups wanted to use alternative data such as social media, telematics, wearables, and IoT devices to offer more personalized and dynamic pricing to customers. However, they faced several barriers such as regulatory constraints, data quality issues, customer privacy concerns, and ethical dilemmas. For example, some regulators prohibit the use of certain types of data such as credit scores or genetic information for pricing insurance. Some customers may not be willing to share their personal data or may provide inaccurate or fraudulent information. Some data may also raise ethical questions such as whether it is fair to charge higher premiums based on someone's lifestyle or behavior. Second, let's talk about the competitive challenge. Insurtech startups had to compete with incumbents who had several advantages such as scale, brand recognition, customer loyalty, distribution networks, and regulatory expertise. Incumbents also had access to large amounts of historical data that they could use to refine their pricing models and underwriting processes. Moreover, some incumbents were not passive observers but actively invested in or partnered with insurtech startups to learn from them and adopt their innovations. For example, Prudential acquired Assurance IQ for $2.35 billion and according to McKinsey, more than $40 billion has been invested in insurtech startups globally over the past 5 years. Therefore, insurtech startups faced a tough reality. They could not disrupt incumbents by offering better pricing alone. They had to find other ways to differentiate themselves and create value for customers. Some of them pivoted to focus on niche segments or underserved markets that incumbents ignored or overlooked. Some of them shifted to a B2B model and offered their solutions as a service to incumbents or other players along the insurance value chain. Some of them expanded their offerings beyond pricing and covered other aspects of the customer journey such as claims, customer service, or loyalty programs. In conclusion, insurtech startups failed to revolutionize insurance pricing because they underestimated the complexity and competitiveness of the industry. They learned that data is not a silver bullet and that pricing is not the only factor that matters to customers. They had to adapt and evolve their strategies to survive and thrive in the insurance market.